Now we're going to turn to Europe and provide some updates as to what's been coming on pricing, on some of the data sets. So we typically don't talk about the UK only because we already cover so much that I'd be happy to if there's a market for it, but obviously, there's only so much that we can do in the day. But one of the things that we wanted to talk about is the PPI side, because the expectation was for 4.4% and the actual came in at 4.9%. So you're seeing another shift up in that producer pricing index. You keep seeing prices going up. It's not just the US, it's not just Asia, it's Europe as well, and it's the other fringe areas of Europe that continue to see the same type of drive higher. So then when we look to the Eurozone aggregate, we want to look at, where is the manufacturing? So let's look at Eurozone manufacturing. Expectation 62, actual 61.5. Services was expected at 59.5, came in at 59.7. Eurozone composite was expected at 59.6, came in at 59.5. So again, you're seeing some of this additional slowdown, not the same type of miss that we had in the US, but you have to consider the Eurozone is at a different point in time in coming out of COVID and seeing some of this reversal. So you're starting to see the cracks, something similar to what we had in the US, and we expect to see a bigger acceleration to the downside. Still growth, still expansion, just not to the level that I think the market is expecting. And when you look at consumer confidence, you're getting something similar where expectations were for negative 4.9%, came in at negative 5.3%. So consumer confidence also starting to get a bit sluggish as they see their wages, they see their jobs, they see what's in savings, and you're seeing people, start to falter. Now, when you look at the Eurozone, this is looking at, the consumer confidence. So the moderate fall in Belgium consumer confidence in August doesn't bode well. So you've seen Belgium kind of be this bellwether, if you will, of like pulling it up. Now you're starting to see it pull back down, and we expect to see some of this continue to deteriorate over the next few months. And it's not so much that it's going to deteriorate terribly. It's just you're going to start to see people balance out. We have a German election coming up. You're starting to see some concerns about what's happening in the French election that's coming, where we've seen some protests against anti-lockdowns, climate change, vaxes, whatever. So there's a lot of this pent-up anger that I think is going to start to come out in the consumer confidence a bit more. Then when you look at the German private consumption, as the bigger side of the German economy is really that essentially the growth engine or what is the biggest driver to European GDP, especially Eurozone GDP. So the fact that private consumption, you're seeing this bounce, but you're still so far off the norm that you can continue to see some progress, but it's going to be a struggle to get back to normal. And we just don't see that happening, especially when you start taking in pricing. So harmonized index of consumer prices, all items for Euro area, continue to go up, elevated, still far below the US, but you get an idea that the US can obviously outperform and you could see it go much higher, but we expect to see the Eurozone really kind of close some of that gap. So this just shows that there's still more pricing pressure. There's still more pricing that's going to come through that it's going to weigh on what is the consumer, what can they purchase, what is their affordability, where are wages versus what the living costs are. And these are some of those friction points that that isn't unique to the US or Asia or Latin America, but also something very, very prominent within Europe. And Germany's no different. So if we look at PPI month over month, was expected at 0.8%, came in at 1.9%. PPI year over year was expected at 9.2, came in at 10.4%. Again, all of these are massive increases when you think of it on an aggregate side, because we continue to see an acceleration in pricing, which is just, again, going to get passed down, and Germany is an exporting nation. So a lot of this is going to get exported to China, to the US, to within Europe in general. And then let's look at PMI. So the manufacturing PMI was expected at 65, came in at 62.7. Services was expected at 61, came in at 61.5. Composite was expected at 62, came in at 60.6. Again, all of this is showing that inherent slowdown. Still, again, it's elevated. It's above 60, But they also have some of the similar drivers, extended supply chains, with delivery times getting worse, with pricing getting worse. These are some of those things that continue to become some of that overarching problem that we continue to see within the system, within the backdrop. So then when you look at private consumption, quarter over quarter came in at 3.2% versus the estimate of 4%. But let's go now to expectations. So when we look at the IFO expectations were at 100, came in at 97.5. Current assessment was expected at 100.8, came in at 101.4. And then business climate was expected at 100.4, came in at 99.4. So you're starting to see expectations come down a bit, business climate come down a bit. Current assessment, still feeling good about it, but what is to come is where we continue to see some of this overhang. And if you look at just where the data is leading to, where prices are going, where wages are, you get a sense that they're just seeing what is going to come and what pressure they're going to have to, or they're going to experience. And if you look at the US, you look at Europe, you look at Asia, they're just seeing what has happened there, and something similar is, it's very similar, if not the same, is playing out. Then when we look at France, with manufacturing PMI was expected at 57.2, came in at 57.3. The services PMI was expected at 56.3, came in at 56.4, but then the composite was expected at 56.1, came in at 55.9, because when you put it all together, this is where things are either this is common in France right now, where things are either okay, slightly worse, maybe a little bit better, but then on an aggregate, they're just missing estimates, and not by much. It's just you're continuing to see this gradual decline and this missing of estimates as we see some of this slowdown continue to creep into Europe. And now German producer prices, this is just kind of giving you the breakdown with the increase in German producer prices is broadening, but the skew towards energy intermediate goods remains historically high as annual consumer good price gains remain moderate and upstream prices seem to be peaking. So the problem that we see here is that when you look at consumer goods, that's going to start to trend back up. But the energy, the intermediate goods is the one where that's the quote from some articles, or paraphrasing from articles, but realistically, we continue to see this going up, where we don't see it peaking in the sense of it's going to peak and fall. We do agree that there's some slowdown in price appreciation, but it's just going to remain elevated and continue to put that pressure. And it's just, if you look down the supply chain, I mean, it's not a leap to say that raw materials are still elevated, that pricing in general is going to remain elevated. So it may not continue to go up, but it's also not dropping either. So then when you look at just putting the PPI into perspective of what this looks like on how it's gone parabolic, this is where we continue to see these pressure points. This is where we continue to see this moving through the system. So then when you look at how German companies are responding to supply chain problems, the most common response is passing on rising prices to customers at 67%, looking for new additional suppliers, which is, again, putting pressure in Asia, putting pressure on China as they look to diversify. Expansion of inventories is obviously going to be a problem, as that'll lock in some of that cost. So only about a fifth of almost 3,000 firms polled by the Association of German Chambers of Industry and Commerce, or DIHK, said they expect the situation to improve this year, while a quarter isn't able to make a judgment on when things will get better. The shortage of raw materials and supply chain problems are hitting the German economy in full scale, said Volker Treyer, head of foreign trade at the DIHK. The current developments can make the economic recovery from the crisis significantly more difficult. We've been saying this. It's just now coming out in the data. I don't know what else to say, but again, it's just more confirmation of things that we continue to see. So then when we look at the German automotive sector, as we talked about in segment 1, German auto industry now has about 5 months worth of production to catch up on as backlogs balloon, given that the semiconductor shortage prevents car makers from filling incoming orders. So this is why you continue to see production falling, starting to flatline a bit. You're starting to see some of this where orders have been fairly stable. And for those that have tried to buy cars, and this is just going to be anecdotal, because I can talk about two different people. I already spoke about my friend, but my parents looking to replace their car that's coming up on lease, and people were essentially not giving any deals and were happy to turn away their deal. They're like, we don't want your car, and we really don't need your business unless you're willing to pay this. And now they've been researching and they've been able to find a deal, but it was just, you don't have the same hunger to get a new deal coming through the door because you have so much sitting there that is unmet as backlog balloons to these highs because production has fallen. So look at orders have stayed flat to up slightly as production has has declined. So your backlogs is getting worse and worse and worse. So, when they sat down with Audi, and Audi said that if you order it today, expect it 4 months out. And if you look at this backlog, which is at 4.5 to 5 months, you're like, oh, well, I guess they're not wrong. And you're starting to see this play out. And this is one of the things when we look at Germany, we look at their economic growth. These are the overhangs. These are the things that are going to continue to weigh on the underlying sector, which I think is going to become a much bigger problem as we progress forward and as we continue to look at Europe and what that growth is going to be, which is going to be growth just, I think, well below what expectations are, and we're starting to get expectations rolled down, which we've been talking about for months, but now it's finally starting to filter through the system. So better late than never, I guess. But now in the next segment, we're going to go into Asia and more specifically, obviously, China and some of the new narratives that have come out, or I shouldn't say it has come out. It's just become more prevalent when we look at common prosperity, really starting to become the rallying cry.